Hello, traders, and welcome back to the Forex Geek, where we dive deep into the tools that can help you make smarter trading decisions. In today's video, we are going to be talking about the Exponential Moving Average (EMA) strategy, which is one of the most powerful yet underutilized tools in a trader's arsenal. The EMA can help you identify trends earlier, find optimal entry points, and protect your profits in volatile markets. So, whether you're a beginner looking to understand this essential indicator, or an experienced trader wanting to refine your approach, this comprehensive guide will transform how you use moving averages in your trading. So stay with me until the end as I share three practical EMA strategies that you can implement immediately to improve your trading skills. So without wasting any much of your time, let's get started. But the first step, I have to explain the EMA, which is the exponential moving average. It is a popular indicator, so I need to explain it before we dive into the strategies. So I'm just going to add it to our chart. This is a trading view platform and we are on the 1 hour time frame. So the exponential moving average is a dynamic technical indicator that calculates the average price of an asset over a specific period while giving more weight to recent price data. Unlike simple moving average, which treats all price points equally, the EMA responds quickly to price changes, making it particularly valuable for traders who need to capture market movements efficiently. For example, in a 20-period EMA, today's price has more influence on the average than the price from 20 days ago, unlike the simple moving average. So I'm just going to add the simple moving average so that we can see the difference between the both of them. Now you should know that the simple moving average is the red color and the EMA is the blue color. Now if you look at this, you will see price reacting quickly to um you see the EMA reacting quickly to price. Now you can see price here giving us this immediate fall to the downside, followed by a sharp push to the upside, an immediate fall and a sharp push to the upside. Now you see that the blue EMA, which is the EMA, the blue color moving average, which is the exponential moving average, it hawks price action more closely and reacts faster to changes in market direction. You can see that the blue line is closer to price, following price everywhere. With this sharp dip, you see the blue moving average, which is the EMA, following price closely. So today's price is more significant, and the EMA captures it more than it captures the price from 20 days ago for a 20-period moving average. We are using the 9-day period moving average. So for 9 periods ago, the EMA isn't going to capture it much than it captures the very day's price. So common EMA periods used by traders are the 5 and 10 EMA. These are combinations. 5 and 10 period EMAs, the 20 and 50 period EMAs for medium term analysis, and the 100 and 200 period EMAs for long term trend identification. So let's quickly look at the strategies, the EMA trading strategies you can use in your trade. The first one is the EMA crossover strategy. And this strategy uses multiple EMAs to identify trend changes and generate trading signals. So you start by plotting a 9-period EMA. So the first step is I'm going to use the multiple EMAs. I'm going to use the EMA ribbon, the moving average ribbon, so that I can plot multiple EMAs on my chart. I need 3 EMAs. So we are going to be plotting the 9-period EMA, the 21-period EMA, and the 50-period EMA on our charts. So we have one with a red color, and I think this one should go with an orange color. Now the inputs, remember 9, 21, and 50. So these are the periods, and I'll remove this one. So you can see it. These are the colors. Oh, sorry, I need to put this again. And this and this red color. So we have the design. The 9 period EMA is the blue color, the blue moving average, and the orange is for the 21 period moving average, and for the red is the 50-day moving average. So for this strategy, the EMA crossover strategy, the rules are very simple and straightforward. Buy when the 9 period EMA crosses above the 21 period EMA and both are above the 50 period EMA. And also, conversely, you can sell when the 9 period EMA crosses below the 21 period EMA and both are below the 50 period EMA. So looking at this, this is exactly what I mean. For a buy trade, it's advised you trade this in a trending market. For a buy trade, you can see the crossover happening here. We have the first cross, which is between the 9 period and 21 period EMA happening right here. But we should wait, do not take any buy trades until you have both of them cross above the 50-day moving average, which happened right here. Remember, the 50-day is the red moving average, the one with the red color. So we have the crossover happening right here. So we could look to take our buy entries. Now we have all moving averages aligned as they are supposed to be. So the next step is to look for ways to enter buy trades. You see this rejection candle here. We have this engulfing candle here also aligning with this. So we just take a price at the close of that engulfing with stop loss below this level, and I'll take profits all the way up. So take profits can be 1:2 or 1:3, or it's advisable you set your take profits at previous resistance levels like this one. It's a very simple strategy, and it's widely known and used in the market. So I advise you to study this, take a look at it. It's advisable not to trade with this strategy in ranging markets like this one. So ensure you trade when the market is clearly in a bullish or in a bearish trend. And the way you'll be able to tell that is by the alignment of the moving averages. Now you can see the crossover for the 9 and 21 happening right here. And you have the final crossover going below the 50-day moving average here. So that's an indication to sell. Now we should be looking for selling opportunities as we've seen this crossover happening right here. So we have a pullback into this level right here. We have a major resistance level here. So we have price pulling back into that area to take a sell off of that level. Our stop losses way above that swing high, and our take profits all the way down. Remember, you can target significant support levels like this one or even this one, or you could use fixed risk to reward ratios to set your take profits. It's very simple, it's very straightforward. So that is that for the EMA crossover strategy. So another key thing you should always look out for is confirmations, price action confirmations. It could be candlesticks, it could be price action. Like for this example, I used this resistance level for my confirmation, and here for the buy trade, I used this engulfing candlestick pattern for my confirmations before taking this trade. So it's always advisable you look for these clues, these confirmations that indeed price is moving in that direction, and this is not just another ranging market. So on to the next strategy is the EMA bounce strategy. So this strategy is another very simple strategy which you can use to capture price movements. So this approach capitalizes on the EMA's ability to act as a dynamic support and resistance level. So you begin by identifying the overall trend using a 200 period EMA. So I'm just gonna delete drawings, and here I'm gonna add 200-day EMA and the 50-day EMA. So just gonna use these two, 200-day and the 50-day EMA. So this we're talking about the EMA bounce strategy. So these are the settings: the 50-day, the 50 period EMA, and the 200 period EMA. Now you should know that the 200 period EMA, The 50 period EMA is your primary trading EMA, while your 200 period EMA is the slower EMA that you use to confirm your bounce. So let's quickly get into the rules. So in an uptrend, which is price should be above the 200 EMA, wait for price to pull back and touch or approach the 50 EMA. Then enter long when price shows a rejection, such as a bullish engulfing power or a pin bar. Now, using this as an example, you can see this is a clear trade. Let me look for a clear example which we can use. Now you have here in a bullish trend, in an uptrend, we are looking to take buy trades. How do I know that this is an uptrend? You can see the connecting trend line. So we are looking for ways to take our buys in this bullish trend. Now you have price above the 200 day, the 200 period EMA. Remember, the 200 period EMA is the red EMA. Now we have price above the 200 EMA, and we should wait for price to pull back and touch or approach the 50 EMA. It should touch it or it should approach it. Now, this is where many traders get confused. When I mean approach, it may not necessarily touch it, but it should be very close to the 50 period EMA. Now, the 50 period EMA is this blue line, this blue moving average right here. So I could look to take a buy as price touches this EMA right here, or as it approach to here or touch it here, I'll use the touch, and my stop loss should be below this swing low, yeah, or below the 200 day, the 200 period EMA, whichever one you choose. Now your take profits should be at significant resistance levels, remember, or you could set it at a 1:2 risk to reward ratio. Now, do not be greedy, always take partials at when you get to resistance levels like this, because as you can see, price didn't exactly get to the extreme, but yeah, price got to this resistance level right here. So that's how I would have been able to take this trade using the EMA bounce strategy. So remember, the first step is that price should move above the 200 EMA, 200 period EMA, and after moving above it, price should approach the 50 period EMA. Price should approach the 50 period EMA, and you could take your buys from here and your stop losses below this level, and your take profits all the way up. Now here I could target this, but this is quite a little bit small. That's a small for my take profit, so I'll just use fixed risk reward ratio of 1:3 for this one. Price rallied all the way up. Or for traders who just can't allow it, they want to take it all, you could use your trailing stop loss and follow price all the way up. You could use your trailing stop loss with together with the moving average. Remember, a cross below this moving average signals a sell or a bearish trend trying to form. So you could take your profits at this cross, these areas of cross. That is one way you can use to take profits using EMA bounce strategy. So that is that for this strategy. Remember, it can also work in a bearish trend. This is a bearish trend. I particularly like this strategy because it removes all the noise. As you can see, we had a whole lot of noise when we were using the EMA crossover strategy, but here in the EMA bounce strategy, there is less noise in the market. You can see the move below the 200 day, 200 period EMA, and at the same time, you have price edging close to this 50 period EMA here. We have the touch here. We'll have it getting very close here. And then we have this bearish engulfing candlestick pattern. So I could just take my sell at that level and my stop loss above the 50 period EMA or above the 200 period EMA here. And just set my targets. I prefer to set it above the 50 period EMA. I just set my targets all the way down. Now for my targets, I would like to set it, and so remember, my take profit targets should be at support levels, significant support levels like this one. So this is where I could set my take profit at 1:1.5, or I could just set it at 1:2 for my take profits. Now that is how you could use the EMA bounce strategy. And for advanced techniques, advanced techniques. This is the third. You could use other indicators to add verify your moving average strategies. Like for example, for additional confirmation, add the relative strength index to verify your trades. So I'm just going to add the relative strength index to this, and we have the RSI here. Now for this, I'll be looking to take trades when it aligns with the RSI. Remember, the RSI is an oscillator, and the way it works, oversold RSI readings is when the RSI is below 30, and during uptrends, pullbacks to the EMAs. So let me explain better. Here we have price being oversold here, so we should be looking for buys. Now at the same time, here we have price moving and giving us overbought conditions. So we would not be able to actually take our trades using the EMA bounce here. Would have waited for when price is a little bit below 50 before we take any trades. This helps us to like verify, because here price got really volatile, so the RSI was just showing overbought and overbought, and warnings that we shouldn't take any trades. So we could wait for when the RSI gives us confirmation, like when it's edging below 50 or close to 30 or below 30, showing us that yes, the market is a little bit balanced. So we should be looking for potential areas to take our trades. So for this, you could take your trade, you could take your buy position around here where price is edging. For the EMA bounce, remember, for the EMA bounce, you could just take your buys as price hit this 50 EMA here. But for the EMA crossover strategy, that's a different ball game. Now we have price here giving us this crossover, but as price give us this crossover, we are overbought here, so just can't buy. Have to wait for where it aligns perfectly before you are able to take your trades. So for example, let me look for a better example where we have price being below 30 and we are looking to buy. Remember, the RSI works for shorter term movements, and the moving average we are using here is quite high. So I'm just gonna edit it to the 9 and 21 to explain this better. Now we are in the 9 and 21. This is perfect. Now you can see that the RSI here is giving us oversold, meaning that we should be looking for buying opportunities. And here at the same time, we have our moving average crossover just an inch later. So we could be looking to buy when price has given us these two confirmations. We have extra confirmations. We have this bullish engulfing. We also have this support level right here, which we could take our trades. So these are all confirmations, and that's how we'll be able to take this buy using the moving average and the RSI. So it works very easy. It's not difficult. You can just study and take your trades using this strategy. It's very simple. Alright, traders, you've come to the end of today's video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, don't forget to like, subscribe, and turn on the notification bell so you never miss out on more trading tips and strategies. Thanks for watching, and I'll see you in the next video.